Okay, we should be live. Let's try this again, ladies and gentlemen. Let me know in the comments if you can hear me, if you can see me, if everything looks good. We had a bit of a technical difficulty last time, and I want to make sure this live stream is good before I start running through it, because my goodness, I got about 5 minutes through, and I saw the chat, and I was like, okay, what's going on? So can you hear me? Are we back? Are we live? Can you see me? Can you hear me? Say yes in the chat or just something. Anything looks good. Okay, we're going to roll with it. Let's go. Okay, welcome back, investors, to Ticker Time News. I am Adam, and I wanted to talk about this yesterday in the live stream, and I totally forgot, so please accept my apology for that. So I'm going to start this video talking about it, and then we'll jump into the quick take of the market today and then answer your questions. So first is Bitcoin. I want to talk about Bitcoin. Is falling. It's down 5.95% today. The big fall came this afternoon. It was up over 31,000 plus this morning. This afternoon, it dipped. It got a little bit lower. It was down below 6%. So it's popped back up a little bit, which is a good sign. But the overall trend for Bitcoin right now is good. Audio and video is perfect. Awesome. I greatly appreciate that. I had to spend a little extra money to make that happen. So it is what it is. So we are here, right? Making it work. So this is the Bitcoin chart here in front of you on the screen. And remember, you can get all the charting to do this at home with us. There is a link in the description for a free account to TradingView. That's where we do all the charting. Okay, this is Bitcoin on the daily view, going back to the end of 2020, right? All the way to the right, to the left of the screen would be December of 2020, and then running across to the red box, this is where we are right now, today. What a crazy roller coaster ride Bitcoin has been on, going from $15,000 a coin in November of 2020 to over $69,000 a coin right here at the peak when this occurred on which date? November the 10th of 2021. 1 year. 1 year going from 15,000 up to 69,000. Incredible run. Now, Bitcoin, it goes in a cycle, right? Every 4 years, it starts back over again, and it goes and goes and goes. And each 4 years, it grows a little bit, right? It has this base where it launches off from. It goes on a crazy run, crazy pullbacks. Sometimes it'll go on a big run again and have a crazy pullback. Well, we had 2 big runs this halving cycle. It started in 2020, and the next halving is in 2024. So what we're trying to do in Bitcoin right now is find a new base to launch off of in 2024. So where's that base going to be? That's the million-dollar question that's being debated. Of course, everything gets debated these days. So right now, you would think that, well, looking at the chart, this might be a good area for a base, right around $30,000. $29,000 to $30,000 looks like a nice base. We've been sitting here consolidating, going back to the big fall on after May the 9th, and all through May, we're just kind of consolidating. Maybe this is our base. Because if we go back, we can see that we tagged this area of July of 21, again in June of 21, May of 21, several times in January of 21. So maybe this would be a good base. It looks logical on the chart. I don't think this is the base. I think there is another leg lower for Bitcoin, and the big reason why is capitulation. Where is the throwing in the towel, hands up, I quit, I give up, this doesn't work, nope, I'm out? We haven't seen that move yet. Just like in the stock market, we have not seen capitulation yet. We have not seen that move yet. where everyone throws in the towel, quits, gives up, I'm done. Investing is for someone else, not me. Unfortunately, that is a very bad time for the market, and it's a very bad time for the people who give up and quit on the market. Because the stock market, I'll be honest here, there's only 3 ways to become wealthy in America. Only 3 ways. And I'm sure these 3 ways can translate to Canada or Mexico or the UK or France or whatever country you may be watching from. The 3 ways are: you own real estate, you own a business, or you own stocks. Those are the 3 ways. And stocks can be a little bit more nuanced because maybe you're in bonds or maybe some sort of treasury, or you're in stocks, or maybe crypto. You know, the alternatives are coming in now. So that one can be a little nuanced, but to keep it simple, own real estate, own a business, or own stocks. And remember, owning stocks is just like owning a part of a business. So there's really only 2 ways: real estate and owning a business. And stocks is owning a piece of every company that you buy. That's it. It's really that simple. And for people that give up and quit when things get hard, when things get tough, when the market is down and it's red, it can feel very, very disturbing. Because finance, money, it's something that we're not taught in school. Going up through middle school, high school, we are not taught finance. And that is a huge mistake in our society, because everything revolves around finances. And so many people are financially illiterate. And I don't even like to say that, but it's to me, it's just true. And if we could get more financial education out there somehow, some way, get it into the public schools, let it be taught. You have to pass finance in order to graduate from high school. Because so many people fail because they don't have the financial knowledge that they need to succeed. And our whole society would do a whole lot better if more people succeeded, right? This one gets me personally, so excuse me for that. Bitcoin, that's what we were talking about. Let's see. I think so. My boss is a multimillionaire and doesn't have a dollar in the stock market. Yes. Does he own a business? Could that be where, or real estate? Maybe that's where it came from. Let me know if it is one of those 2. I'm curious. If it's not, I'm very curious. Because when you boil it all down, at least from my perspective, that's where I see wealth coming from. So financial freedom is just financial education, understanding finance, the basics of finance, and then you can get financially free. It doesn't take a whole lot. Real estate, business, stocks. Lawyer. Well, lawyer, is he at his own firm, or is he with a practice? Because I mean, if you're on your own, you're an entrepreneur, you're a business owner, a partner, business owner, you're a part of that business. But yeah, I get your point. There are some specific fields that you could go into and make a ton of money. But financial education is where you actually find that wealth, right? Where you can pass that along. You can help someone else. That's where I want to be personally as a goal. I want to be someplace where I can help the next person. And that's part of this YouTube channel. Helping one person, it's a goal, and if that's achievable, I would love to achieve it. Lawyer is business. Yep, that is true. Okay, Bitcoin. Let's get into this now. I think Bitcoin is going to go lower. How much lower? That's the question. Well, I have it marked off here in this red box with these two yellow circles here. There's two paths to get here. One is a little more aggressive, and one is taking a little more time. So the first yellow box, it's about July of 22, okay? The second yellow box is October of 22. Both of these paths get to the same price point. They just either get there quicker or take a little more time to get there. That price point is $20,000 a coin. And actually breaking below that, getting back into 19. So another $10,000 lower than where Bitcoin is at right now. I think that's the next area for a base to be built for Bitcoin to launch in 2024. That's my thinking for it. That capitulation move hasn't happened yet. And these two purple trend lines, here's where they connect. They both start at the all-time high of 69,000 back in November of 21. They diverge in the early part of April of this year. March of this year, they start to separate, but it's April where they really separate of this year. The quicker one, you can see here, and I'll get in a little bit tighter here. You can see we've been hitting resistance at this lower purple line. We did it right here in April 21st. We tapped it again on May the 4th and got rejected on May the 5th. And here again, we touch it right here on May the 30th and kind of flirt with it on May the 31st and get rejected off of that line today. So if we're going to continue to follow this quicker path, I think we've got one more big leg down, and then we hit this area, 20,000, maybe a little bit under. The box that I have here is actually 20,000 to 15,000. So there's a $5,000 spread there for where I think the base is going to land. And then the two time frames here that, you know, I guess the earliest that I think it could get here, maybe July 19th. Although it could just find its way and just come straight down. It could. Because, you know, we had that move right here. Let me get my drawing tool real quick. We had that move straight down not that long ago right here where it really went. So, I mean, we could have a straight drop down into this box here. That is a possibility, although I think it's not likely. But I do believe there's one more big drop. Now, the other one obviously follows a different trend line that gives it a little more time. Maybe some time to consolidate right here around 29 to 30,000 before it breaks down to this 20,000 area for this platform here. That's where I think Bitcoin is going. That big capitulation move where everyone gives up, quits, throws in the towel, and sells. After that big move is made, that's when I think the base can start being built for the launching pad coming off for 2024. Now, Bitcoin has its halving cycles every 4 years, and the supply or the mineable tokens or coins, however you want to phrase it, it's cut in half, right? So it becomes twice as hard to mine Bitcoin every 4 years. And it goes to a supply of 21 million, not a single coin more, not a single coin less. So it'll become a scarcity. And that's part of the theme behind what makes Bitcoin a value holder, right? Obviously, those who got in the market over the past 2 years thinks, oh my gosh, there's just no way Bitcoin holds value. especially if you got in, almost any time during 2021, you're underwater. Let's see, January 1st of 2021, okay, it opened at 28,900. So if we go from, let's say, February of 2021 and you bought Bitcoin, you're pretty much underwater right now. Anytime through February 21, going before this big drop off here in, say, May of 2022, you're underwater. And you're thinking, oh my gosh, this doesn't work. What's happening? But there will be a base. Bases have been built. They get a little higher every 4 years to launch off of. It's a cycle that it goes through. And those that have been holding Bitcoin and other cryptocurrencies for a while understand that cycle. If we look at Ethereum, it's down 5.8% too. It moves in a very similar pattern to Bitcoin, almost. I mean, you can kind of see the double tops there, almost a triple top really for Ethereum. But Ethereum does have some other use cases that Bitcoin doesn't. Bitcoin is a store of value. At least that's the proposition that's being offered. And it does over time, at least my perspective, it does. Ethereum, it's got other use cases, and I can't believe it's down to 1827. Now, even in a down market like this, on crypto and stocks, there's ways to make money. And even on cryptocurrency, it trades so in such a rhythm, right? As I go in tighter here on this, I'm going to go to the 5-minute chart so we can look at today. I mean, look, going back just after the market closed, I mean, that's about where the bottom was hit, and it's been pulling back up from its bigger decline earlier today. But it moves in such a way that it's very methodical. It's very on point. And I think it's easy to trade. We're not looking for big gains when you trade crypto right now because of this downward pressure that's in the crypto market. Maybe you get 1% or 2%. I mean, it's a quick in and out trade that you're making. Nothing, much longer than 30 minutes, maybe an hour if you're stretching it. And then you're out of it. It's just a quick in and out on crypto right now. Okay, I have been talking about Bitcoin quite a bit here. Let's get back on the market. So let me pull up the S&P 500, and we can talk about the market here. Bitcoin are holding well around 30,000 so far. It is holding pretty good around 30,000. But I do believe there is another down move coming. Just like I believe in the market, we're looking at the S&P 500 here. I do not believe we have found a bottom yet. I just don't think so. And after I share with you some of the things that came out today, you'll probably be thinking the same thing. And it's unfortunate. I wish that wasn't the case. But okay, let's just get into the market today. In the stock market today, I don't want to get confused with crypto because that's what we were talking about. Let's leave crypto behind now. In the stock market today, it ended on a weak note. There were all of the main indices finished lower today, and they really weren't back above lows that were hit yesterday, which is a problem. The S&P lost 0.75%. The Russell 2000, it was actually one that performed a little bit better today. And when I say that, look at the 5-minute chart for the S&P 500 here for today. You can see, in that big volume move yesterday, I confirmed it. It was rebalancing. The holiday weekend kind of pushed things around a little bit. So that big candle was rebalancing. I know we were talking about that yesterday. All right, so this morning we open up, we drop down. midday, at right after lunchtime Eastern, we start to pick it back up, but then we sell off the last half hour, 45 minutes of the day. Now, when I pull up the chart for the Russell 2000, it fell too, but it kind of came back a little bit hotter than the S&P 500 did from it looks like a V shape right here on the day, but it was still down 0.5%. So it wasn't like a huge big deal for it. Now, early action saw a combination of yesterday's selling with some, I guess I would call it, top performers fueling the retreat, right? We always talk about the big market cap growth stocks. They really make it. They really move the market. They've got big market caps, so they have a lot of sway in the market and what it does, right? So the financial sector today, which had lost 1.7%, it underperformed throughout the day after rallying off its, I believe it was 13-month low at the end of May. So financials were doing good there for a moment. Today, it turned it off again. Today, the sector was pressured by comments from JPMorgan Chase and their CEO, Dimon, who warned about an approaching, and this is his words, quote, economic hurricane. Economic hurricane? How are we supposed to take that? A guy that's been in the finance business for a very long time, longer than me, a very long time, head of a big bank, knows a lot about the economy, has seen many market cycles, many business cycles, and now, oh my goodness, an economic hurricane is approaching. And he says it's because two reasons. One, of quantitative tightening, and we talked a little bit about that yesterday. It's when the Fed is taking money out of the market. Okay? Quantitative easing, which we were in all through 2020 and a little bit through 2021, the Fed is putting money into the market. The market is being stimulated by money being added to it. And 2020 was a very rare event, a black swan event. And the governments around the world pumped in even more money into the economies as the economies were basically shut down. So there is something about this that just doesn't sit right with me. Oh, and the second reason was the Ukraine war. The invasion of Ukraine. It's messed up commodity prices. It's messed up oil prices. And when oil prices are high, that equals bad things for the economy too. So those were the two reasons that he gave. And it just wasn't sitting right. Someone with that expertise in the market saying that. Shares of JPMorgan gave up all of yesterday's gains, and they finished a bit lower, but they did bounce off, and we can look at that on the chart. It's JPM. They did bounce off their 50-day moving average. Yeah, the last 5 minutes, it was absolutely crazy. So I took the moving averages off, put them back up there. There we go. So you can see today, the bank, this light blue line that's coming down, that's what it bounced off of today. So it kind of closed really even along here. There's a nice support line right about where it's at, 129, 130, which is interesting. So an economic hurricane. Now, this comment got me thinking. And I sent all of our investors on Patreon. I talked about the economy a little bit, and Jamie Dimon's comments that he made. And this is the note that I sent out. So there is plenty of weakness right now beneath the surface of this market that will send the market to a new low. I have that new low marked on the chart. We see it every day. And for my investment thesis, for me, it's not a matter of if it will happen, it's a matter of when it will happen. The timing is the unknown. In the thesis, I think I know where it's going to. I just don't know the timing of that. Could it be within the next 3 months? Sure. Could it be within the next 6 months? Sure. But it almost seems like this rally is running out of steam. Now, let me just plug this right quick. If you would like to get this valuable content and so much more to help you along your investor journey, then come join us. Just click the first link in the description. We'd love to see you there. All right. The broader market enjoyed an afternoon recovery, but renewed selling pressure did appear during the last 45-30 minutes of the day. Elsewhere among cyclical sectors, industrials, they were down 0.6%. Consumer discretionary, down 0.8%. They finished near the S&P 500, while the technology sector down 0.3%, ended just below its flat line after reclaiming a chunk of its operating loss, or opening loss, I should say, operating. The sector owed its outperformance to relative strength in one of the top stocks in its sector, Apple, AAPL. Apple helped to pull that sector up. Apple is nearly flat today, down 0.09%. And Microsoft, MSFT is Microsoft's ticker symbol. And they were up 0.2%. So these two big behemoths helped to hold the market almost flat, right? Both of these companies combined have a big sway in the market. And even though the S&P was down almost 0.5%, around that, Apple being slightly down, flat, Microsoft being slightly up, helped the market from going down too much further. But they did also face that same late in the day selling pressure. Look at the 5-minute chart for Microsoft. See that? The same thing that occurred in the indices. That last half hour of the day, there was selling pressure, just like yesterday, but the volume was not as big as yesterday. And then we have companies like Salesforce, who's a barometer for the business. CRM is the ticker symbol for Salesforce. They were up nearly 10% today. Yeah, 9.88%. And they had pretty good, decent earnings. We talked about this yesterday. We also had HP. They reported. HPQ, they had good earnings as well. They weren't up 10%. Was it 3.9, 3.86, so 3.9 there. They've been in this trading channel for a long time. I mean, just moving sideways for 6 months now. I am really surprised. What is this for the year? It's up 7% for the year. HP, a technology company, they are up 7% year to date. This is one that you should have on your radar. When it dips down to the bottom of this channel, somewhere around $35, you scoop it up. It gets up here to $40, you sell it. And it's been, going through this for a while now. But these earnings were just so good, it kicked it out of this area here. Just clearing this chart up a little bit. So it has been on a downtrend over the past couple of months. I can put a line right down here, and you can see that downtrend there, making lower lows until right before earnings, and then since then, it's just been moving higher. So I do expect HP to come back down. When, though? Will it stay up for the rest of this week? I do expect it to come back down, though. I really do. I don't think it's going to stay above this line, not with an economic hurricane approaching off the shore. But, you know, these two, Salesforce, HP, they represented pockets of relative strength throughout the market. Both companies reported better than expected quarterly results, and that was the main reason. Now, chip makers today failed. They failed to keep pace with the sector. They sent the PHLX semiconductor index, and you can look at that by going to SOX, and you want to choose the second option. Yep. Choose the second option. On the right-hand side, it'll say TVC. Click on that. That's the one you want to look at. And you can see this. This is the semiconductor index. It's got a resistance line here that's been bumping up against. It still has some room to get up there. And it's been finding some local support recently, right around these levels down here, 28, 25. So it pulled back today, 1.6%. But it's got room, but it does have room to move. And if we look at this, in between this, in between this top right here, when the trend started, and then this one peak right here, it's really been hugging its 21-day moving average. I mean, maybe you could even type in a 30 or 35-day moving average, and it might actually be hugging that a little bit tighter. Not quite the 50-day, it's a little bit off of that. But you can see it's really trying to hold on to that 21-day moving average there. Now, this is obviously a sector that has been beaten up. Just look at AMD, NVIDIA, and how far they've fallen. So once this does turn around, this economy we're in, I suspect we'll have ourselves a nice rally out of this hole that we've dug. But you can see that support there holding up, even going back to May of 21, again, May of 21, January of 21, and when it first broke through this, the beginning of January of 21. All right, moving on. Healthcare today, it was down 1.4%. Consumer staples down 1.3%. They finished near the bottom of the leaderboard due to a broad-based loss. Archer Daniels, ticker symbol is ADM. Archer Daniels was the worst performer among staple stocks, down 4.5%. And this one's been, look at this rally going back to the beginning of this year, right? The beginning of this year is when it last touched its 200-day moving average, right here. That's the beginning of the year. Year to date, up 28.3%. Archer Daniels up 23. Did I say that right? 23 or 28? Now I forget. My apologies. 28.3% year to date. This pullback that it's made, that makes this interesting to me and worth a watch. It's going a little bit tighter here. See this recent pullback? It peaked here on April the 21st. It's trying to find this support line right around $80 a share. maybe going up as high as $81 a share. You can have a little gap in there. And but it was a big pullback today, really big one. Okay, so Archer Daniels, one to keep an eye on. It's a little bit weak right now, but it's interesting. Now, Archer Daniels in its fall today, you can, one more thing to point out, from this low that it made on May 19th, it's been rallying for several days in a row. And that finally broke today. And look, right around that 50-day moving average. See, I haven't said this in a while during the live stream, but the 50-day moving average is incredibly important. Incredibly important. It's bullish above, bearish below. That's simple. If you remember that one key to trend lines, then you'll have something on the chart to help you and be your friend. Now, this loss today, bucking that 50-day moving average, puts it in a bearish structure. On the upside of the market today, energy, my gosh, energy has been one crazy sector to be in this year. It was up 1.8% today, and it spent the day in the green, building on its gains as the session went on. The sector's continued strength was supported by another uptick in crude oil. You're looking crude oil, just type in oil. You can type in U.S. oil, U.S. OIL, and that'll get you the crude right there on the chart for you to look at. It's at $112 right now. It's heading lower, so it is selling off a bit, but it is in an overall uptrend. There is no denying that. It is in an uptrend. It just hit resistance right now, so it's got to pull back. Once it pulls back, maybe the rest of this week, it'll bounce again. So it is a nice trading channel going up, unfortunately. And in connection with Jamie Dimon's comments about a economic hurricane hitting us, we're in the path of, there was talk about oil going up to $150 a barrel. But it has come down since the close. It closed at $15 a barrel, $115 a barrel, and it's now at $111. You can see it dropping as we've been talking here. So it is coming down a bit. And then there's another company I want to talk about, Baker Hughes. Ticker symbol is BKR. Baker Hughes was up about 4% today, 3.97. It's been on a nice run, a really nice run since its earnings report. It was at the top, or the top performer in its sector. It reclaimed all of yesterday's losses. So this is one that is in an uptrend right now. It's above its 50-day moving average. Its 50-day moving average is at $34. It's at $37. So you can call this a bullish above scenario. So that's another one to keep on your radar. So all through the market, you can find patches of strength, even though the overall market is showing weakness. Now, I want to talk about GameStop just real quick. They reported earnings in the after hours. GME is the ticker symbol. They reported their Q1 earnings. They finished the day down 2.6%. And it doesn't look like they had much of any gains. You can see here that they missed EPS big time by 43.4%. TradingView has them locked in at a loss of $2.08. Estimate was a loss of $1.45. They did gain in revenue of $62.69 million, or 4.7%. So good on revenue, bad on earnings. And you expect that from GameStop because they're in a transitional period. You know, this company is going to go through a lot of changes over the next year or even 2 or 5. But it's changing. So with its earnings report coming out today, that revenue was up, I just caught it on my notes, 7.8% year over year. So a small growth in revenue. And again, they're going through a transition, so it's going to take some time before you see some real earnings results from GameStop. And I believe on their earnings, they attributed most of the growth in sales to their new and expanding brand relationships. So it's nothing that the company has been doing. And I believe they ended the quarter with inventory near $1 billion for the quarter, compared to about $500 million at the close of the same quarter last year. So that was a big jump in inventory. GameStop has just about or just over $1 billion of cash. So they've got plenty of money to work their turnaround, and we'll see where it goes. There was also interesting news about Blue Apron today. They unlocked access to a new customer base by offering meal kits to Walmart.com customers. Now, I think this is a big deal for Blue Apron, and it does a lot to move them away from a subscription, their own subscription-based model, because the Walmart.com customers will be able to buy just a single kit, no subscription needed. So that'll be interesting to see where Blue Apron goes. I just want to look at the chart real quick for them. They were up quite a bit today off of that news. Down 6.9% regular session, but in after hours they were up. But I do not have after hours information right now, so that'll come in tomorrow morning when the market opens. Okay, moving off of Blue Apron there. Let's talk about the Treasury market just for a moment, because the Treasury market added to their losses from yesterday with shorter notes, meaning the 2-year. We'll pull that up first. US 0 to Y for the 2-year. It rose 11 basis points to 2.65%. You can see it. It's still in this green box. Let's open this up a little bit. It's slowly moving up from several days of being just flat right on its support level. It is now starting to move up right with its 50-day moving average. It's like it caught that 50-day moving average and say, let's go for a ride. And it's riding it up a little bit. And then the 10-year, right? US 10Y, to look at the 10-year. It rose 9 basis points to 2.93, down slightly in the after hours, 2.91. And again, it's above that 50-day moving average. It broke out of its resistance area. So this is still looking bullish for the 10-year to move up there. And you know, typically when that goes up, well, tech goes down. The one thing, though, the 10-year is linked and it's sensitive to growth. If we have an economic hurricane approaching, what's that going to do to the 10-year? People will flood to that looking for safety, and it's going to drop. Because remember, this works opposite of the stock market. When there's a lot of people rushing in to buy the 10-year note, okay, the percentage goes down. So it costs more for that 10-year. When few people are buying the 10-year, than the interest rates going up. Just keep that in mind. It's kind of reversed from what the stock market does. Now, the Fed did release the beige book today for June, which noted a whole bunch. That all districts reported continued growth, which most of them reported a slight to modest growth, while a few of them reported a slowdown. That I think was very interesting. A few areas did report a slowdown. There was some softening in the retail sector, which we expect because the consumer is being weakened right now, and also residential real estate due to high prices and high interest rates. People are being priced right out of the market. Employment expanded a little bit, not a whole lot. I believe there was one district where employment was actually negative. It slowed down. Prices continued rising at a strong and robust pace, with manufacturers maintaining the bulk of their pricing power. Now, on the economic front, we got the May ISM Manufacturing Index, and it increased to 56.1. 56.1 from 55.4 in April. And a number above 50 indicates expansion. The further you are above 50, the quicker you're expanding. So it's been contracting, and we just got a little slowdown there, right? May marked the 24th consecutive month of expansion in the manufacturing sector, although the May reading was the second lowest since September of 2020. I think the key to this is that manufacturing activity actually picked up a little bit in May despite ongoing supply chain problems and pricing pressures. Still, sentiment regarding demand remains strongly optimistic. Then we got total construction spending. It increased 0.2% month over month in April, following a 0.3% increase in March. Total private construction, that increased to 0.5% month over month, while total public construction actually decreased 0.7%. On a year-over-year basis, total construction spending was up 12.3%. And then you throw in the weekly MBA mortgage index, it fell again, this time 2.3%. And the previous week, it fell 1.2%. Sales are falling in the housing market. Prices are still going up. That doesn't mix. Then you throw in interest rates are just rising. The housing market bubble is almost blown to its max pressure. Its max pressure limit. How far it falls is anyone's guess, but an economic hurricane, I just can't get that phrasing out of my head. Now, the takeaway from this is that other than residential spending, there wasn't much strength in spending activity in either the private or public sectors. And then we got job openings decreasing to 11.4 million in April from 11.85 million in March. Decrease. And then add in the ADP employment change for the month of May will be reported tomorrow, followed by the weekly initial claims, continuing claims, and we also get a revised Q1 unit labor cost as well. Interesting. Is the labor market starting to soften? Because it's been a bull in a China cabinet or China store, whatever the phrasing is. I forget at this point. So it'll be interesting to see a economic hurricane approaching. Think about that phrase for a moment and what it may mean. Think about what happens when a hurricane comes through Florida or Louisiana. Things don't go very well. You've got the rare hurricanes that head up north and hit Northern Virginia. We've had hurricanes here before. New York. And we look at this market, and I know we haven't hit bottom yet. And I'm afraid that if a economic hurricane is coming for the market, if too many things happen at one time, we're going to see a very quick move down. So we have to be very vigilant about what's happening around us. If many things pop off at once, that's the worst case scenario for this hurricane. That's like maybe it stalls in the Gulf of Mexico and grows a little bit bigger. The winds become a little stronger, and the number increases, maybe from a 4 to a 5, or maybe a category 3 to a 4. Who knows? Or maybe it's one of those oddball storms that kind of just brushes the coast. We don't have a lot of things pop off at once. And it's just a slow move down. Quite frankly, I'd rather have the big move down in the market, so it's done, it's over with, and we can finally focus on growing again, right? All right, let's see here. Microsoft insiders bought a lot yesterday, according to Form 4. What do you think? They are very positive, such as new Surface laptops are selling, good for students. Okay, so with this question, let me pull up their chart real quick. MSFT is the ticker for Microsoft. When you have insiders buying or selling, it could be for 20 different reasons. But typically, what you'll see when on the buy side, selling could be maybe they have options and they have to sell a certain amount of shares. Maybe they're selling shares because they want to buy a house, buy a vehicle, whatever. They need the money for something. But buying is typically done when you think that the value of the stock right now is not valued appropriately, meaning you think that there can be a lot of appreciation done in the stock. And if you look at Microsoft is a company that's not going anywhere. It's very established, and it has a lot of products that the corporate side businesses use. So when I see that insiders are buying shares out of a stock, I see that as a positive, bullish sign. They believe the stock is undervalued and they're going to load up. It doesn't mean the stock has reached its bottom. The stock could still fall more. If we get that capitulation move down in the market, it'll pull everything else down with it. So it doesn't mean that we're at a bottom, but it does mean that the people who are in charge understand that where the stock is valued and what's in the pipeline for the company, it's a no-brainer. We buy now. Or we dollar cost average. That's a phrase that I don't use too often. DCA, dollar cost average. It's a great way to get started. And in a down market, sometimes that's the best way to handle it, because you never know the timing of when it's going to reach its bottom. So I think it's a good thing. I don't know if it means for any very specific product or not, like the Surface laptop. I don't know if it's about any particular product. I just think it's about the company as a whole. They know it's in the pipeline. They know the health of the company. So if we do get hit with an economic hurricane, they know that they have the resources to survive. So I see it as a bullish, very positive sign that buying here or even waiting a little bit or just taking nibbles. Because remember, one thing that I've said before, small positions right now, small positions. Don't go in big all at once on anything. So I see it as a very positive sign for Microsoft. Sorry, that comment just caught me there. Okay, Buffett bought last quarter HPQ. They know insight. Yeah, absolutely. Absolutely. HPQ, oh, excuse me there, has been had a great earnings spurt. I believe we have a standalone video out there on HP. I think I did it during their last earnings report. Talked about the company then, and the company looked, pretty good. And if you look at the company here on the chart, I know we had this pulled up before. They've just been moving sideways over the past 6 months, and they're at their resistance right now. So it is likely that it's going to come back down. It may not come all the way down to support, even though that's typically, what it's been doing. So watch that thing for a pullback, and if it pulls back enough and you feel comfortable, I think it's a good one. I really do. Okay, watch that last comment there. That, I don't know, that's spam, I think. So watch out with that. Yeah, all right. So, I went a little longer than I wanted to here because we had that technical difficulty at the beginning. But make sure if you found some value in this video, learned something new, do me a favor and click that like button, share this video, and come join us. And investors, just like you and me, who want to do better and be better, click that first link in the description, join us, and, maybe we can actually beat this thing. Okay. Also, let's put this one up here right quick. All right. Do you see companies guiding down or missing next earnings since people are cutting back now that things are really expensive? There's already companies that are cutting their guidance. You can watch for that for specific companies in between earnings. It's not completely quiet from company. Let's take HP, for example. It's not completely quiet for HP. In between earnings, they can revise their guidance up or down, and you see it all the time. I'm pulling up HP's, let's see here. I want to look and see if what their upgrade downgrade has been like. All right, just taking a little second here to load. All right. All right, so that's loading. I don't think TradingView shows any of that type of information, even on the more financial section. All right, let's see here. So for HP, for example, this is actually interesting. So their earnings per share, and if you look here, you can see that they reported $1.08 a share for EPS. It was estimated to be at $1.05 per share. So they beat it by 3 cents or 2.68%. So over the past 90 days, and 90 days is from last quarter to this quarter, 3 months, they have revised their EPS 4 times up and 9 times down. That's interesting. Like I said, it's not always quiet. Just look for earnings revisions. Most companies do it. Okay, so HP here. So over the past 3 months, from last quarter to this quarter, 4 EPS revisions up, 9 EPS revisions down. They have revised the revenue up 5 times. They have revised revenue down 6 times. Just over the past 3 months for HP. So tracking that is interesting. And then again, there are already companies who are revising their earnings or their guidance lower for the coming quarters. And many companies on their earnings report reported about the second half not looking good. I mean, just look at Cisco, for example. Oh, I didn't click the right thing. Oh, okay. It got me there. Cisco, no, it didn't click on the right thing. Sorry about that. Here we go. There we go. All right, so last earnings for them. Their earnings weren't bad. So if I pull this up here, you can see they're basically flat on EPS, and they missed revenue by 3.9%. They dropped. How far was this? What was this drop? We had a 4.4% drop, a 13.7% drop. So nearly 18 to 20% drop there on their earnings. And it was about their guidance. They're guiding that the second half of this year is not looking good. Supply chain, big problem. Getting components is an even bigger problem for Cisco systems. So definitely watch that. Let's see here. That could mean this bear market could last for a while, right? If companies start to guide down. Yes. We're not out of the woods yet. Some people, on the chart, they can call it a bear market rally. They can call it a dead cat bounce. There are many things to call what we're going through right now. But here's the thing to keep an eye on. Let me do this for a moment. Right now, the market is in a clear downtrend. I can't draw on here because I hid all the drawings. Actually, let me do this. Let me go to the SPY. Right now, we're in a confirmed downtrend. This is one of the biggest things to get. Also, gas in Cali is out of control. I'm saying, yeah, $7. I saw $8 and $9 for diesel this morning on the TV when they were talking about it. But we are in a confirmed downtrend right now, okay? If we go from the peak here on the SPY, I'm just going to draw a simple line out here. We are making a lower high, right? A lower high. And you could even say that maybe even the past couple of days here might have been the lower high as well. It's a steeper decline than this top trend line here, but we're making lower highs, and we are making, look here, lower low to lower low to lower low to lower low. So we are in a downtrend right now. We are making lower highs and we are making lower lows. We have to start making higher lows and higher highs to see this start to reverse and we can blast out of here. So until then, have a bearish bias with everything in the market right now because we are in a downtrend. Do not have a bullish bias. Right now, I heard this from somebody. I hope they didn't trademark it. Let's see if I can get it right. Oh, sugar, I forgot it. Oh, what was it? It was a good one. Good little phrase for where we're at right now. We are bearish until proven otherwise. We are bearish until proven innocent. I can't remember how this person said it. But yeah, have a bearish bias with everything in the market right now because we're in a downtrend. Yeah, gasoline has got to come down. That's got to be one of the first things to drop for us. All right, well, I'll go ahead and wrap up the live stream for today. It's getting pretty late here. So I'll catch you guys tomorrow after the market closed, and hopefully this whole live stream technical glitchiness is done and over with, and it'll be in our past. All right. Click that and click that. All right. Thank you, ladies and gentlemen, for being here with me today. I greatly appreciate it. Make sure to smash that like button, share this video, and click the first link in the description. You'll love the information. It'll help you along your investor journey. I'm Adam, and I'll see you in the next video. Take care.